It's Thursday, October 5th, 2023. Please make sure to like, share, and subscribe. A few things I want to talk about today. First off, I'll start with this. Markets were pretty much down today, waiting for the news tomorrow regarding the jobs market, which I don't know about you. Whatever the number is, I'm not really going to believe it, but any good news regarding the job market will be bad news for these markets because if the numbers come in better than expected, you can bet 100% we are going to get a rate hike in November. But remember, whatever they come in, they'll be revised down next month. But switching gears from that, we'll wait and see what happens tomorrow. There's some very interesting articles circulating today all over the internet, and some very interesting news I was watching today. But I want to start with this first article, and this comes from The Hedge, and it's titled, "Something Popped. Google Searches for Sell My Airbnb Surge as Travel Downturn Worsens." Airbnb owners are about to be forced into becoming property sellers. And I believe that this is where a lot of the inventory is going to come from that is going to flood the U.S. housing market. The Airbnb bubble has already burst. Investor home purchases crash 45%. Ask yourself right now, who in the world, who in their right mind would go out and buy a home for an Airbnb investment right now? Think about who would do such a thing. That would be absolutely tragic if you were thinking about doing that right now. Some Airbnb operators are facing 50% revenue declines. This was on a video, and it's in this article, but it was on a video by Reventure Consulting last month. And these are huge numbers. And we're seeing a huge shock to the Airbnb market out here in the Coachella Valley, the Palm Springs area. Huge shock. It says here, Austin, Phoenix, Denver, San Antonio. These are some of the hardest hit Airbnb markets. And these were some of the hottest real estate markets in the U.S. And now they're beginning to feel the shock. I have a buddy who lives out here in the desert, and he lives next door to an Airbnb property. And this property sold for a pretty good amount of money. The owner came in, refurbished the whole property. So he's heavily invested in this home for I think around $750,000. And it's not a huge house. It's not an incredible house. It's shocking that this house has $750,000 invested in it. But my buddy says he hasn't rented the house out in over a month. The Airbnb renters have disappeared. And the same owner of this property has a rental property in Palm Springs where he's trying to evict his tenants who have not been paying him. So this is where the problems begin. So many people bought homes as short-term rentals, long-term rentals. When the tenants don't pay in the long-term rentals, and you've got to evict them, and they've been there for months and months, and now you're having to cover all this cost. And then you have, or then you have a short-term rental like an Airbnb where it's not renting now, and so you have multiple mortgages. How long are these people going to be able to float this before they come to the realization that they're going to have to sell? And if they just bought a house a year or two ago and paid way over what it was worth, can they even get out? How many of these people are upside down right now? This Airbnb euphoria that began a few years ago really played a role in this housing bubble that we have right now. Of course, the Fed helped create a massive bubble here buying mortgage-backed securities, keeping rates extremely low, but it allowed these small investors to come in and buy properties that they really normally could not afford, but because they could get a rate at 2.5%, they became a real estate mogul, and then they would leverage one house for another, and now they own 3, 4, 5, 6, 7 houses, and now they're not renting. People have really gambled here, never thinking about an economic slowdown. Like that wasn't possible. This was never going to come to an end. All the stimulus money, all the cryptos, the NFTs, people making money hand over fist, this booming real estate market that we had that was completely propped up by the Fed, low rates, and then you had Airbnb come into areas. I look at the Coachella Valley and I think, how many homes are short-term rentals? How many people bought these homes not as personal homes, not even as vacation homes? They bought them as Airbnbs. In so many of these developments, they went in and they paid full price, they paid above full price, and now they are in big, big trouble. And many probably think, well, it'll get better in a month. It'll get better in 2 months. I just have to wait it out. I'll be okay. It's not going to get better, ladies and gentlemen. It is not going to get better. And then what's going to happen when we begin to see a flood of Airbnb owners list these homes and run to the exits? And now all of a sudden inventory starts picking up. Once the inventory picks up in this housing market, you're going to see prices crash. And they're no longer going to be able to use the excuse that, well, there's no inventory, so prices are going to, stay where they're at. We're going to see a lot of people forced to sell, ladies and gentlemen. They're going to be forced to sell for many reasons, but we're going to see a lot of people that wanted to be real estate moguls who didn't really understand real estate. They didn't understand the economy and that we have economic downturns, and they're so leveraged. They're so upside down now. These people are not going to last very long. Many of them probably won't even be able to sell these homes. They're going to default on these homes. They're going to be forced to try to do a short sale. And here we go again. It starts all over again. We're back to a 2008 housing crash, but this one will be even worse. Here's another one to add to the misery. Mortgage rates jump again amid housing market slowdown. Bankrate.com today, 7.88% for a 30-year. Mortgage applications are at a 30-year low. Application volume is down 22% year over year. And again, wait till the inventory begins to hit the market. Remember, you have home builders now that are going to be finishing up homes. Those homes are going to be coming on. You've got people in the Airbnb sector that are going to have to dump homes, people getting divorces. You have landlords who are going to get out of the landlord business. They're dumping homes. And then you just have people who have to downsize, or they're moving, or for whatever reason, they're selling. Inventory is only going to go up. And unfortunately, many people, no matter what their mortgage rate is, they're going to be forced to sell these homes. It doesn't matter if you have a rate of 2.85%. When you don't have a job, it doesn't matter what the rate is. But what we're going to see is we're going to begin to see prices heading down, rates going up, and it is going to get extremely, let me repeat, extremely competitive to sell a house. Here's another one from CNBC, why borrowing costs for nearly everything are surging and what it means for you. 10-year Treasury yield today, 4.7 and change. Yesterday, it was 4.8. One of the if not most influential numbers in finance is that 10-year Treasury, ladies and gentlemen. It says right here in the article, Lindsay Rosner, head of multi-sector investing at Goldman Sachs Asset and Wealth Management. She said, I do think there has to be some pain for the average American now. It's amazing. All of these economists, the forecasters, these people on these television shows, hosting these shows in $3,000 suits, they never saw any of this coming. They never told us, never warned us that borrowing costs was going to go so high. How blind are these people, or just how corrupt maybe are these people to turn a blind eye to this and not warn the average American? People are still taking their advice from people on the television. They're still believing these people. So many of these people are heavily invested in these markets. They're paid by corporate America. They're heavily invested in the stock market, in the real estate market, the bond market. Of course, they're never going to tell you that it's going to go down. They're never going to warn you that a crash is coming because they're heavily invested in it. They get paid to prop it up, ladies and gentlemen. I hope everybody is beginning to do some due diligence, that they're beginning to think for themselves and stop believing everybody that wears a suit and a tie, stop believing everybody that's on a television, and start thinking for yourselves. How many real estate agents out there just told people that The market only goes up. There's no risk here. You buy this house today for $1 million. Next year, it's going to be $1.5 million. Well, that might have worked for a year or two, but those days are long gone. And I hope that when you call your real estate agent and go, why did I pay 20% over value of this house, or 20% or 10% over asking price of this house, why did you tell me to do that? More than likely, your real estate agent will never answer their phone. They're never going to call you back because they don't have an answer for you. Because first off, they're in full denial. They get paid to sell homes, and they don't really, most times, not everybody, but most are not going to look out for your best interest. They're looking to get paid and make money. That's the name of the game here. And again, most of them don't really understand what's happening in the economy. They don't care what's happening in the economy. They just care about selling a house, and that's it. So when you call and ask, why did you sell me this house and tell me it was a good deal and I'm losing money, more than likely, they're not going to answer their phone, and they're never going to call you back. Here's another article today that I thought was pretty interesting, and it comes from Fox Business. It's titled, "Homes are now unaffordable in 99% of the U.S. for average Americans." And I will say this, it's going to get unaffordable for a lot of present day homeowners. We're going to see people who presently own homes where it's going to be unaffordable for them to maintain these homes. And why do I say that? Well, because 70% of this country is living paycheck to paycheck. You look at homeowners insurance going up. You look at HOAs going up, maintenance costs going up, real wages going down, inflation going up, savings rate going down. And you look at the debt to income ratios, on average, 40% of people's income before taxes is going to their mortgage payment. And that number is climbing. That is unsustainable. Most people now that own a home are one emergency away, a medical bill away, a flat tire away. They're one emergency away from big trouble. People are tapped out. How in the world are people going to maintain paying these mortgages when 40% of their income is going to pay these mortgages? They have no money saved up. They're tapped out. They're running up massive amounts of debt with credit cards. And again, you get a $10,000 hospital bill. You get a $5,000 transmission bill on the car or the truck. You're in big trouble. And we're living in a time where people have nothing saved up. They have no reserves. All they have are credit cards. And when those get tapped out, what are these people going to do? I see some real big trouble here, ladies and gentlemen, and it's very, very concerning, and it's actually getting a bit scary because I don't think that the average person quite understands how bad this is going to get. Many people just believe, if I can just hold out for another month, or maybe I'll get a raise, maybe I'll find a better job, maybe my wife's going to get a new job, and it's going to change, it's going to get better. Take a look at the leadership in this country right now. Take a look at the condition, the health of the U.S. economy right now, and take a look at what real inflation is doing to people at the grocery store, at the gas pump. I drove by the Indian casino today, Agua Caliente in Rancho Mirage, and they have a new gas station opened up about 6-7 months ago, and they had regular gasoline at $4.99 today. Okay, that's the cheapest by far you're gonna find it out here anywhere. Oil, by the way, down to $82 and change today. How is that possible? I mean, they must be absolutely ravaging our petroleum reserves right now, our strategic petroleum reserves. They must just be decimating them to get oil prices down to $82. But as I drove by that gas station today, $4.99, and the line was out onto the road. So I mean, people are lining up, spending 20 minutes waiting to put gas in their car for $5 gasoline. Think about that. People are waiting 20 plus minutes to pay $5 a gallon for regular gasoline at the Indian casino gas station today. It's unbelievable. It really is where prices are going. Levi Strauss cuts full-year sales forecast again as inflation takes toll, citing weak sales of its denim at department stores and big box retailers. And let's not forget the student repayment has begun. It has started. And of course, that is going to, I think, play a huge role in retail sales. Not going to be good for retail sales. We're going to see huge economic headwinds now for restaurants and retailers, because that is $15.8 billion a month not going back into the economy. It's going back to these people paying their bills. And so it is going to definitely take a toll on the U.S. economy, and that has just begun. So we won't even see those numbers until next month. Here's another one from Fox Business. Chicken prices hit record highs under the administration as U.S. inflation keeps beef and pork out of reach. So I was at the store today, and Porterhouse, if you want really good steak that has no hormones, no drugs, all natural, you literally, it's shocking. Prime Porterhouse, $33 a pound right now. And so it's getting so expensive for beef. And I've noticed the store that I go to, that the area where they put the steaks, it's like this big now. It's literally like this big. You have some ribeyes, New Yorks. You hardly can even find a porterhouse. That's it. And they said that they keep most of their meat in the back now, and they'll cut it for their customers, but they don't put it out because people aren't buying it. Then they have to get rid of it. So as more people cannot afford $33 for a steak, I think it was $27, $28 for choice. They're turning to pork too. I mean, pork is getting really expensive. How about seafood? Super expensive. So people are turning to chicken, and now chicken is hitting record prices. U.S. consumption of chicken is expected to exceed 100 pounds per person this year for the first time ever. Arkansas-based Tyson has closed 6 plants that employed 4,700 employees to reduce cost. So we're going to see more layoffs, food prices going up. I mean, now we've got Kaiser on strike. We've got the automakers on strike. Las Vegas is talking about going on strike, their hospitality workers. I mean, it is unbelievable. Everything is beginning to melt down. I find it entertaining, these people a year ago that thought that the inflation wasn't that bad, it was transitory, it's going to go back down, I'm exaggerating, don't know what I'm talking about. These people, I mean, it's amazing to me how some people think, isn't it? I mean, I'm sure you know some people like this. We all know people like this. We come across people like this, that nothing bad's going to happen. No reason to prepare. Our politicians will take care of us. The banks will take care of us. The system will take care of us. You're exaggerating. Nothing to worry about. Boy, oh boy, were these people sadly mistaken. I hope that these people are okay. I hope that they're eating. I hope that they have a job. I wish no ill will on anybody. I want to see everybody succeed. I want to see everybody survive, and not just survive, but really do well. There is going to be opportunity coming, but be very aware that there is going to be very, very serious problems that come along with opportunities. We're going to have a social breakdown in America, and we've been watching it take place for a few years now. And it seems to be magnifying and accelerating, and most people don't want to recognize that. All they want to do is talk about the sales that you're going to get, and you're going to be able to buy a house cheap. And I think you will. I was reading an article today that said that most homes today are 46% overpriced. Think about that. Most homes today are overpriced by 46%. I do think that we're going to see big sales coming all over. Autos, RVs, boats, land, homes, all of that. But before you buy in to this euphoria that everything's going to go on sale, you better be able to protect yourself, because take a look not just at the crime, but the types of crime that are taking place. Crimes on elderly people and women and children, and just the most innocent people out there that are being victimized. And it's so sad. And I think about how bad this can get when government subsidies slow down or shuts down. we see food shortages or food prices get so expensive that people who are on a fixed income, maybe they're on WIC or EBT and some type of government subsidy, people are going to get very, very angry when they get hungry. And we're seeing people act out now just to go and steal handbags and gym shoes and clothes. And it's fun, it's entertainment, maybe they make a couple dollars on eBay. But what happens when this begins to get very real? When people get upset because they're hungry and the system now has disappointed them. The system has let them down. They're going to lash out, ladies and gentlemen. And when the grocery stores don't have food or they're on lockdown, when the stores have nothing left on the shelves, there's no more handbags, there's no more places to rob, you know where they're going. You know where they're going. Be very careful. Be very careful out there. Here's another one. GM has at least 20 million vehicles built with possible dangerous airbag. The government says that these cars should be recalled before more people are hurt or killed. Since the strike, GM has lost $250 million. They just secured a $6 billion line of credit on Wednesday. What are they preparing for? I mean, they're getting a cash reserve ready for something, ladies and gentlemen. But, you know, you look at like this recall with Ford, they're investigating, what was it, 700,000 EcoBoost engines. Now we're talking 20 million vehicles that might possibly have faulty airbags that could hurt or kill somebody. The quality of what we make in this country, and we don't make a whole lot. Remember, a lot of the parts of these cars are made in other countries. In fact, most of these American cars, 70% of them are probably made in other countries and they're assembled here. But we cannot even make a decent product now as a nation, and we don't even manufacture that much. And what we do manufacture is subpar. It's really, really embarrassing. It really, really is. And to think that this could actually hurt or take somebody's life, not good. Not good at all. The hedge today, 56 rare Porsches head to auction despite classic car bubble bursting at this week's Sotheby's. I thought this was pretty interesting. They're talking now that all this money isn't floating around, that interest rates are going up, inflation continues to go up, political leadership in this country seems to be up for grabs. Nobody really knows what direction we're going. There's just so many problems. The stock and bond turmoil that's taking place. Just everything's pretty much chaotic, and it's affecting the classic car market. And in this article, it says that a 1931, this was at the Sotheby's auction, I believe, at Pebble Beach. In 1931, classic Cadillac, it was a 370A V12 Roadster. It was forecasted to sell between $200,000 and $300,000. It sold for $187,000, well below range. Another Pebble Beach car sold for 50% off at the RM Sotheby's auction there at Pebble Beach. So again, with all this chaos, the uncertainty, the unknown, the easy money now, it's not easy to make money on Wall Street anymore. It's not easy to borrow money. You can't get cheap money. People making millions of dollars in the cryptos. That game is long gone also. So this money's not flowing into the Rolex watch sector or the luxury watch sector. It's not flowing into the classic car sector. It's certainly not flowing into people's bank accounts because people really literally have no money in their bank accounts now. So, but even with the wealthy people, they're pulling back because they see chaos and they're not going to pay full price for anything, whether it be a house, a car, a watch, etc., when they know that the market is plunging. They're going to sit back and they're going to wait for bigger and better sales. Article from the Market Insider. The collapse in Treasury bonds now ranks among the worst market crash in history. Ladies and gentlemen, I will tell you right now, I would much rather be holding gold than bonds or stocks. And when you read this article, since March 2020, Treasury bonds with maturities of 10 years or more have plummeted 46%. Absolutely shocking. That's just under the losses seen in the stock market when the dot-com bubble burst. Goes on to say that the bond rout is worse than the one seen in 1981 when the 10-year yield neared 16%. And I will close with this last article because I think it's truly one of the most important times to be owning gold. If you can't afford gold, get some silver. This pullback, I think, is a huge opportunity. Look, you know, I walk the walk the best that I can. I would never advise or recommend anybody do anything that I'm not doing. And I would never give anybody financial advice. I'm sharing with you what I'm doing, what I think is the most safe and intelligent thing to be doing right now to protect yourselves. This is not the time to gamble. This is not the time to be buying big ticket items. This is not the time to be taking risks. This is the time to really be protecting yourself. The time to jump in and take advantage is when these things collapse. Then there's opportunity. Then you can take some more risks. Things are on sale. But central bank gold buying continued to sizzle in August, according to this article on The Hedge. Central banks globally added 77 tons to the reserves in August. This is physical gold, ladies and gentlemen. This is not paper. This is physical. Big difference. Over the past 3 months, net gold buying by central banks totaled 219 tons. Total central bank gold buying in 2022 came in at 1,136 tons, the highest level of net purchases on record. In 2023, 24% of central banks plan to add more gold to the reserves in the next 12 months. So as I leave you today, another word of advice: make sure you're protecting your wealth. Watch out for the bond market, the stock market, the housing market, commercial real estate. This stuff's in big trouble. I'm going to tell you right now, I'm going to purchase more physical gold. If you need a good, reputable place, because a lot of people, they don't know how to do this. They ask me, what's a safe place? Where's a reputable place? First off, let me be very clear. I don't care if you buy gold or you don't. I'm not advising anybody to do anything. I'm sharing with you what I'm doing. But a lot of people reach out to me and they're not quite sure where to buy from or how to do it. SD Bullion, I have a link down below. Again, you can buy from whoever you want to buy from. If you can't afford gold, get some silver. Just buy from somebody reputable. I don't care where you buy from. You can go anywhere you want where it's reputable. Just buy from somebody reputable. I'm just referring SD Bullion. That's where I've been buying for the last 5 years. They've been absolutely very easy to deal with. My shipments get here quickly, and the service has been great. I've never had an issue. Prices have always been competitive. And so I just want to pass that on to all of you, that you need to be protecting yourself. And if you're thinking about buying gold or silver, I don't think there's a better place other than SD Bullion, link down below. But again, I know people are going to get really mad because I have a link and I'm referring people to SD Bullion. You know, again, I'm not going to refer you to somebody or something I don't do business with or I don't do myself. I tell people to work out. I tell people to do jiu-jitsu. I tell people to get to the range. I tell people to buy food and water. I tell people to have security. I tell people a lot that they should be doing right now to better themselves and protect themselves and insulate themselves. And, you know, I think that when you have the opportunity to do that and help people, I'm going to continue to do that no matter what the haters want to say, what the trolls want to say. They have, let's be honest, the haters and trolls are broke. You're brokies. You have no money, you have no gold, you have no silver, you have no cash, you have nothing. And so you'll hate on people who are actually being proactive in doing something. The people who are going to survive, the people who are going to prosper and thrive. Those are the people you hate. So you'd rather hold people down and tell them, don't buy gold. Don't buy gold. Even though gold has gone up over the years, and over the years it's going to continue to go up. And it's not you know, something I buy to get rich. It's something that I buy to protect myself. That at some point, if an opportunity comes up and I want to sell some gold and convert it into US dollars, if I want to convert it into pesos, if I want to convert it into pounds or rupees, I can convert it into, you know, any currency around the world. It's very liquid. So let me be very clear. I would never advise anybody to do anything that I'm not doing. I'm trying to eat better. I want you to eat better. I'm trying to work out more. I want you to work out more. I'm trying to get in better shape. I think you should get in better shape. I'm working on my security. You should work on your security. I'm trying to protect my wealth. The best way I see it is with gold and silver. And I think that you should probably think about doing something like that. Again, you can buy cryptos, you can buy stocks, you can buy bonds, you can do whatever your heart desires. This is me thinking out loud. This is what I'm doing. This is what my circle is doing. And look, there's no guarantee in life, but I can guarantee one thing. Gold and silver will not ever go to zero. They have a 5,000 year history. Never have they gone to zero. And there is no country on planet Earth that does not know what gold or silver is. Don't do what the central banks are telling you to do. You should be doing what the central banks are doing. You should be your own central bank. Anyways, I don't want to rant. I just want to close with that because I think we really have to be protecting ourselves every which way possible, mentally, physically, spiritually, and of course, financially. So have a good day. I hope that somebody got something out of that. Please comment down below. Feel free. I want to know what you're thinking today on any of these articles or anything. Where do you see this going, and what's going to happen tomorrow? What's going to happen with the job market? Are we going to get a better than expected job report, and that is going to put a lot of pressure on the Fed to raise rates, or is it going to be worse than expected, and this may give the Fed a reason not to raise in November? Let me know your thoughts. It's anybody's guess at this point. I have no idea, but this thing is definitely getting very, very interesting. Stay safe out there. God bless. Hope to talk to all of you very, very soon.